Welcome to the deep dive. Today, we're really digging into a company that's, well, perched right on the edge. BigBear.ai, ticker BBAI. They're a specialized player in AI and machine learning, focusing almost entirely on national security and defense. Really critical stuff.
Absolutely, and it sets up this classic high-risk, high-reward situation. Their mission, it sounds great, deliver clarity for the world's most complex decisions, very ambitious.
Powerful, yeah.
But what we need to do today really is synthesize the intense conflict. You've got the strategic potential, the bull case, versus, frankly, some staggering financial underperformance. That's the bear case.
And that's our mission today, to untangle that conflict. Because the research paints BBAI as being at a critical strategic inflection point, like right now.
Exactly. They've got this huge cash infusion they need to use for growth, but at the same time, they're facing some severe operational challenges they absolutely have to overcome.
And if you look at the numbers, those financials, you just can't ignore the massive alarm bells ringing. Where do we even start?
You have to start there. I mean, the financial struggles are stark, persistent, and they really define that bear case. Let's just hit the bottom line first. Q2 2025.
Yeah.
A reported net loss of $228.6 million. Staggering.
Wow. $228 million.
And that came right after a $62 million net loss in Q1. So it's not a one-off.
Okay, wait. $228 million loss in just one quarter. Let that sink in. Especially, you mentioned their guidance, right? How does that compare?
Well, that's the shocking part. Management revised their full year 2025 revenue guidance down to just $125 to $140 million.
So they lost significantly more in 3 months than they expect to make in revenue for the entire year.
Precisely. I mean, how is that sustainable? It just screams about the severity of these operational challenges we're talking about. It's deeply concerning.
Really? And it wasn't just the bottom line, was it? The revenue, the top line, had its own problem.
Oh, absolutely. Deeply troubled. First, we saw stagnation. Revenue just kind of hovered, stuck between $155 and $158 million from 2022 right through 2024.
Which is already not great in a field like AI, which is supposed to be high growth.
Exactly. Stagnation is bad enough.
Right.
But then that stagnation actually turns into a sharp decline.
That was Q2 2025, right? The sharp drop.
Yeah, Q2 2025 revenue fell 18% year over year, down to just $32.5 million for the quarter.
Ouch. And the consequence of all this poor performance was management's reaction, which I think you said sent maybe the worst signal.
That's when they made that drastic downward revision to the full year revenue guidance we just talked about.
Yeah.
But the real kicker, the critical point, was they withdrew their adjusted EBITDA guidance entirely.
Okay, adjusted EBITDA. For anyone not deep in finance jargon, EBITDA is earnings before interest, taxes, depreciation, amortization. Kind of a proxy for operational cash flow. Why is pulling the adjusted guidance such a harsh signal?
Well, because adjusted EBITDA, it's a non-GAAP metric, right? Management uses it to paint their picture, the best possible picture of underlying operational health. How much cash could we potentially generate?
Right, their preferred view.
Exactly.
Yeah.
So when they pull that forward-looking metric, when they say, we can't even guide you on this adjusted number anymore, it signals they've lost confidence, or at least visibility. They can't predict or control their near-term operational execution or cash flow. It just screams uncertainty, high uncertainty internally.
Okay. So that paints a pretty bleak picture, a sea of red ink. That's a formidable bear case.
It is.
But this brings us to the paradox, doesn't it? The contradiction at the heart of BigBear.ai. If the financials look this bad, what on earth is keeping them afloat? What are the strategic anchors here?
It comes down to one surprising thing, mainly cash. Despite those huge operational losses, BBAI made some strategic moves, likely involving financing or asset sales, that really fortified the balance sheet.
Okay.
As of the end of Q2 2025, they reported a record cash position, approximately $391 million.
$391 million. Okay. That is a phenomenal war chest. That's runway, right?
Yeah.
Runway to execute a turnaround or maybe capital for more acquisitions, even while they're burning through cash. But let's push on that. Given that quarterly loss, nearly $230 million. I mean, how long does $391 million actually last if that burn rate doesn't slow down dramatically? Isn't that just kicking the can down the road?
That is the core tension.
Yeah.
You're absolutely right. How long that capital lasts depends entirely on whether they can execute this strategic pivot they're attempting successfully and fast.
So it's a bridge, a potentially short bridge.
It's a critical bridge, yes.
Yeah.
But it requires operational discipline they haven't really demonstrated consistently yet. However, it's not like they're starting from zero revenue-wise. They do have existing contracts.
Right, the revenue visibility piece. They reported a backlog.
Yes, a pretty substantial one, $380 million backlog as of June 30, 2025. And that does offer some degree of future revenue visibility. It helps calm the market a bit.
But there's a but, isn't there?
There's a huge but. That visibility is completely 100% contingent on successful execution. If BBAI keeps struggling with actually delivering on projects, staying within scope, that $380 million, it could evaporate or get delayed or renegotiated down. Backlog isn't cash in the bank.
Okay, so execution risk looms large over the backlog too. But the wider context, the market they're in.
Yeah.
That has to be a plus, right? Defense and national security AI.
Oh, massively. They are, you could argue, exceptionally well-positioned just based on the market itself. Powerful secular tailwinds. Think about the global geopolitical situation. It's complex, it's tense.
Yeah, unfortunately.
And government funding for integrating AI into defense and national security, it's only accelerating. So they're playing in a market that is basically guaranteed to see massive growth. That strategic positioning, you can't easily replicate that.
Okay, so foundationally, cash buffer, a decent backlog if they can deliver, and a fantastic market tailwind. Got it. Now let's dig into the risk tied to their current revenue, the concentration.
Yeah, the concentration risk. It's high, and you could argue it's unsustainable long-term. The research we looked at showed that back in 2024, an astonishing 52% of their total revenue came from just 4 clients.
4 clients. Half their revenue.
4. And critically, the vast majority of those were government entities.
So basically, half their income is tied to the whims, the budgets, the procurement cycles of maybe 4 specific desks in D.C. or somewhere similar. That feels incredibly vulnerable.
It is. Vulnerable to funding shifts, political changes, maybe just one big project ending, which is exactly why this strategic pivot they're attempting is so urgent. They have to move away from relying so heavily on these bespoke, service-heavy government projects.
And towards what? Scalable commercial growth.
Exactly. And the key asset for that pivot, the vehicle really, was the acquisition of a company called Tangium. That deal brought in a crucial piece of tech, the veriScan biometric identity platform.
Okay, Tangium acquisition brings veriScan. And the goal is to take this presumably defense-grade AI capability and push into the commercial world, specifically airports, biometrics.
That's the plan. Penetrate the commercial aviation market. Airport biometrics is the beachhead.
So how's that push going? Is veriScan getting traction?
Well, based on deployment numbers, they've made real physical progress. veriScan is reportedly deployed at more than a dozen international airports now.
Okay.
And it's being used by over 60 airlines. Plus, there are trials ongoing at several other airports. So clearly they have a product that the market is willing to test, willing to deploy.
That sounds like momentum, solid traction. But here comes the critical analysis part again, right?
Yeah.
If this commercial pivot is the key to getting away from those 4 big government clients, we need proof it's actually working financially.
And that is the gaping hole in the information available. While we know the deployment numbers, the airports, the airlines using it, the research we reviewed provides absolutely no specific disaggregated revenue figures for veriScan.
No breakdown of how much money veriScan itself is making. Why is that lack of transparency so damaging to their story?
Because the market is waiting for validation. BBAI is telling everyone, hey, we're changing. We're moving from selling tailored services to selling a scalable platform. veriScan is supposed to be the prime example, the proof point.
Right.
Without specific revenue numbers, it makes you wonder, is it actually generating significant income yet? Or, maybe worse, is the revenue it is generating still getting booked, like low-margin service work? It makes it basically impossible for anyone on the outside to really assess the financial impact, the viability of this new strategy.
So the long-term vision, the shift to scalable AI platforms, it sounds logical, it sounds good, but the market's basically saying, show me the money.
Pretty much. They need to prove they can move from selling, highly customized work to just 4 main clients, to selling a product that delivers predictable, hopefully higher margin revenue across potentially hundreds of commercial customers.
It's a huge shift, culturally, operationally.
It's a huge shift, yeah.
And speaking of potentially huge shifts, we have to talk about the one single opportunity that could genuinely be the game changer. The thing that could either make the bull case explode or finally crush the bears.
Yes.
The TSA contract, securing a massive enterprise-level deal with the U.S. Transportation Security Administration.
This is the high-reward part of the high-risk, high-reward equation we started with.
Yeah.
This is what makes tolerating all that risk potentially worthwhile. There's significant market chatter, speculation around a potential TSA technology modernization program.
And the numbers being thrown around are huge.
Reportedly valued at up to $5.5 billion.
Billion. With a B.
$5.5 billion. Okay, let's put that in context again. BBAI hopes to make maybe, what, $130 million in revenue this entire year?
Yeah, ballpark.
Securing even a decent chunk of that potential $5.5 billion TSA deal.
Yeah.
It wouldn't just do growth, it would be utterly transformative. It's like the holy grail in the defense and critical infrastructure AI space right now. If they land this whale, it changes everything, instantly.
Oh, wow.
But, and here's the rub, this is precisely where that financial risk we discussed and the operational challenges collide head-on.
How so?
Because the primary operational risk, the very execution problems that led them to pull guidance, it all comes down to, can BBAI actually scale its operations successfully to meet the demands of such a massive, complex, enterprise-wide contract?
Right. It's one thing to juggle, say, 4 large but distinct government projects. It's a completely different beast to suddenly manage a multi-billion-dollar nationwide rollout for one of the most scrutinized security agencies on the planet.
Exactly. They've shown struggles with execution on their current smaller scale. So the big question is, can they suddenly flip a switch and handle massive scale delivery flawlessly?
It makes you wonder, too, maybe that huge cash pile, the $391 million, maybe it's not just a safety net.
What do you mean?
Maybe they needed that cash on the balance sheet just to even qualify, just to be taken seriously for a bid the size of the TSA contract. Maybe the cash itself is part of the ante to play in that league.
That's a really sharp insight.
Yeah.
Yeah. The cash isn't just defensive. It might be an offensive requirement just to get in the door for the really big prizes. Fascinating.
So, okay, for you, the listener, trying to make sense of this this really complex situation, here's the synthesis. You've got BigBear.ai armed with nearly $400 million in cash. They're strategically positioned in a hot market, and they have this potential $5.5 billion prize, the TSA contract, maybe on the horizon.
The potential is huge.
Yet to actually grasp that potential, they first have to conquer their own internal demons. Those significant operational execution issues we keep coming back to, and their dangerous over-reliance on just a handful of government clients.
They've got the capital, they got the market opportunity, maybe even the golden ticket opportunity with TSA. But what they desperately lack right now is the proven track record. The consistent, profitable execution needed to convince the market they can actually deliver when the stakes are this high. That's the conflict. That's what determines if they survive this pivot.
So just to recap that core tension one last time, a company sitting on $391 million in cash, staring at a potential $5.5 billion jackpot, yet simultaneously grappling with a $228.6 million quarterly loss and huge uncertainty around its basic revenue forecasts. I mean, it really is the definition of a high-stakes gamble.
It absolutely is. And
Yeah.
maybe that brings us to a final thought to leave you with. Considering BBAI's stated goal, right, to embed mission-ready, operationalized AI solutions into critical workflows and make that shift from services to platforms, which is actually the greater challenge for them right now. Is it achieving profitability the old-fashioned way, maybe, by winning and successfully executing a single massive government deal like TSA? Or is it proving the new strategy, the platform strategy, is financially viable by finally opening the books and showing specific, meaningful revenue from assets like veriScan?
That's interesting. Prove the old model can scale massively, or prove the new model actually works financially.
Yeah. Think about the implications of trying to scale that specialized defense AI into much broader commercial infrastructure. That commercial proof seems essential for the long-term story. But the sheer gravitational pull of that massive government prize, you just can't ignore it.
It's a tough choice, or maybe they need both. A really complex strategic decision BBAI has to navigate, and fast.
Indeed.
Well, that's all the time we have for this deep dive. We really appreciate you joining us.